Welcome back, guys. Fortunately, unfortunately, I got another time. One more day. My work has been delayed for one day, so I thought, okay, let's try one more time. Okay, so I'm here to disturb you one more time. But before that, let me know that you guys can hear me clearly. The voice is okay, and please don't forget to give me the like. I can see there are some people, but still I have only 3 likes. I always request you for like actually, and I think it's free of cost. You don't need to pay for the like. If you don't like it, then give me the dislike. I'll be happy for that as well. Please just let me know you guys can hear me, and I will talk about the yesterday's price action first, then I will go for today's price action. Okay, so please, it's important that you can hear me. Okay, and good sound. Thank you, George. Thank you. Hey, how are you, George? Hey, Ronald, how are you, brother? I think everyone is fine. I'm fine as well. I'm here to give you, disturb you. Okay, so when the voice is good, I should talk about the price action first. uh, thank you, brother. I'm sorry if I mean, pronounced your name wrongly. I think you were with me yesterday, so all of you know this is Euro USD 15-minute chart. I actually just uh, remove today's price action. I will just remove the price action from today. What? Okay. So here, okay. If you remember, when price was over here, I told you that I got my liquidity has no sound swing for dollar today, no judo swing for dollar today. I will go over there, brother. First, I really would like to talk about yesterday's price action. Then I will go for today. Okay. So if you were with me, when I marked this one, I told you that it has taken the sell side liquidity, gave me the very nice market structure shift. This was the only fair value gap. So if price can come over here, that would be the best opportunity to take buy. And if it fails, then it will make some kind of fair value gap over here. Okay, I was expecting is it was just make some kind of fair value gap over here. So that would be the best opportunity to take buy. Okay, over here you can see actually price came here to this fair value gap, and I will go to 1 minute chart. Any of you actually love to trade forex, this is for them. Okay, so when price came here, it has taken all the sell side liquidity from here. You see all of this sell side liquidity has been taken by this swing, and it has it came to the 50-minute fair value gap. Now if you look over here, it has taken the sell side liquidity, market structure shift. Where is your two fair value gap? I'm removing this two line. Okay, this two line, just remember this two line is from 15-minute fair value gap. So price actually came to the 15-minute fair value gap. Now I'm in 1 minute chart, and from 1 minute chart I can see price has fine, it has successfully taken the sell side liquidity. Then it has given me very nice market structure shift. If you would like to mark this one, it is valid. You mark this one, that is also valid. This parabolic that is also valid. I'll mark this one because it looks better for me. So I'm marking this one. But to be honest, brother, if you mark this one, it is valid. If you mark this one, that is valid. This is also valid. So any one. Okay? So where is your two fair value gap? I can see a lower fair value gap. That is my first fair value gap. That should be the breakaway gap, and that is my second fair value gap. Okay, so this is my second fair value gap. What is the rule? The rule is when price will come the upper fair value gap, I will take my buy over there. That means my buy will be here, and I will put my stop loss below the consequent encroachment of the breakaway gap. I prefer to put the stop loss over little bit lower of the breakaway gap. Okay, so I'll go, I will put my stop loss over there, and I will look for some kind of buy side liquidity. That would be very nice. Very clean buy side liquidity. If you see this high and this high, they are relatively equal highs. Okay, so this should be your buy side liquidity. I mean here. Okay, So that is your buy side liquidity. I have just marked the buy side liquidity. I always go for the equal highs. So if you just see this high and this high, they are relatively equal high. I think this is the best of, best option for marking the buy side liquidity. Now, will you go for that buy side liquidity? The highest buy side liquidity? No, I'm not going for that. I would love to go for this buy side liquidity. Okay, this single high, or maybe this high and this high, they're also relatively, but I will not go over there because this is also too far from here. I prefer to come over here, or here is okay as well, because I can see there is actually some nice buy side liquidity. Just let me remove this. All of these highs are equal. Okay, so you can actually target these highs. That would be the best option for buy side liquidity. So that should be our entries. From Forex. This is from Forex. Okay, don't get confused. This is not future. I talked about this, so I thought I should talk about this one more time. Now, if you think actually price came too far, and actually when it went too far it came back again, you really don't want to take your buy over there. You really don't want to take, because it can easily go lower and take the sell side liquidity, or maybe it will go below this sell side liquidity. It can do that. Okay, so I'm not interested to take buy over here. Now what should you do then? You have to wait for, i mean very lower opportunity. That means it has to take some kind of sell side liquidity first over here, then it has to give you the market structure shift. After that you will take your buy. Okay, if you look that way, then there is no entry actually, so you have actually missed the entry. Yeah, it happens, brother. To be honest, it happens sometimes. It actually make swing high, swing high, swing high, but it never take the sell side liquidity over here. But in future you will see actually future market. Okay, not future means future, it's futures market. So it actually it can take some liquidity from here, then give you market structure shape with a nice fair value gap. You will take your buy over there for some kind of relative equal highs. Okay. Abhinav, can you please talk about the lower fair value gap in 1 minute chart? Yeah, brother, I'm talking about the 1 minute chart. This is 1 minute chart. This is 1 minute chart, brother. In 15-minute chart, we have seen actually price came to the 15-minute fair value gap. That was the 15-minute fair value gap. I marked it yesterday after taking the sell side liquidity, market structure shift. If price can come to the 15-minute fair value gap, if it can come over, that would be the best entry. If it failed to come over here, then that will make another fair value gap over here. Just let me show you that thing. I told you it will make some kind of fair value gap over here. Okay, so if you didn't clear about this, just watch the yesterday's live streaming. I have used this thing to show you the fair value gap over here, and that was the fair value gap over here, exactly over here. That was over there, exactly over there. Okay, so I will go over here as well. But what I was talking about here, in 1 minute chart, in 1 minute chart we got our market structure shift over here. When we got our market structure shift over there, that was the first time when we could take our entry. That was also a very nice opportunity to take our entry. You see, market went above, it come back again to the first fair value gap. It never went to the breakaway gap. So if you would like to take your entry over there, that is also valid. I wasn't here in this market, but this is the setup I always tell you to take. Two fair value gap, after taking sell side liquidity, market structure shift, two fair value gap. If you look for two fair value gap, that is kind of more confirmation that market actually would like to go higher, because the lower one will work as a breakaway gap. Okay? So if you didn't take your entry over there, if you could take your entry over here. But if you don't want to take the entry depending on the price action because it went too far, then it come back again. If you really don't want to take that on, then you have to wait to see that it will take some kind of sell side liquidity again. The same setup will happen is this setup. Okay, this setup has to happen over here as well. If it happens over there, then you will take your buy. Okay, now when price actually came here to the upper fair value gap, I told you that if it failed to come here, it will make the fair value gap over here. So if it can, when it has come over there, just let me show you the price action. Just a second. Okay, okay, I think I can just close this one. I don't need that one. Okay. So over here. Okay, so over here you can see it has taken the sell side liquidity. This is the sell side liquidity has taken by this swing. It has taken the sell side liquidity. It has given you market structure shift over there. That is only market structure shift that is valid for me. After after shifting the market structure, there was two fair value gap. Now you can ask me why, brother, these fair value gaps are not important. Look over here, why these fair value gaps are not important. Obviously all of these fair value gaps are important, as this is, what to say, the forex market. I don't expect the precise price action. That is the reason. That's why I don't trade forex. Instead of the forex, I trade in future market. So if you see over here, that is the only opportunity when you got the market structure shift over here. That was your two fair value gap. You have to take your entry to the first fair value gap. You have to cover the breakaway gap. After that, market actually went higher. For the last fair value gap over here, it went over there. Okay, then price actually went lower, and it was doing something over there. Okay, so if you any of you actually trade forex, you can just watch this setup from yesterday. Then don't forget, I outlined it beforehand. Okay, I did it beforehand. If you were with me to my yesterday's streaming, you already know that. Okay, so I will go back to the Nasdaq, and I would like to explain the setup from yesterday. I mean, the thing I actually explained. Okay, I'm good. Okay, Ronald, thank you, brother, because you were good. I'm also good. Hey, Mystic, how are you, brother? Thank you, brother. I just my work has postponed for one day, so I won't be here for sure, 100% sure, in front of my chart from tomorrow. Okay, Abhinambo, I think you got your answer. Assalamu alaikum. Walaikum assalam, brother. Dude, stream today. Yeah, brother, I just got one more day, so I thought this is the best time. I mean, it would be best for coming to the live. Okay, so if you remember, this is the 15-minute fair value gap, the biggest fair value gap. And whenever I see this type of biggest fair value gap, the 25% and 75% is very important for me. Okay, so I'm going to mark the upper 75%. So I mean, the this one is actually 75%. Okay, so I'm just mark it as 75%. Just think like it is over here. Okay, now I'll remove this one. Don't forget, this green line is for 75%. When price was going higher, I what did I tell you? I told you we have nothing to do over here. So it was going higher. We need some kind of retracement, or if it can break this high, we will frame our trade above the high for the buy. Okay, so that was our expectation. Hey, Ravi, how are you, brother? Over here to this area, specifically this area. So I am just gonna explain the thing it happened over there. Okay, so just let me go over the little bit. Okay, so over here. Okay, look over here. What is the first the level where from where price could reverse? This was the first level, because this is the 50% of the 15-minute fair value gap. Then we have 75%. At last we have the highest fair value gap, the high of the fair value gap. Okay, so when I see it went through the 50% of the of the 15-minute fair value gap, what I told you, do you remember, brother? Any of you remember? I marked these lows, and I told you if market would like to go higher, it has to take this sell side liquidity. It has to take this sell side liquidity. Okay, so that was my sell side liquidity. Why it has to take that sell side liquidity? Because that was the clean highs. There was another clean highs over here. This is another clean highs. Just let me mark it. This was also very clean highs, and later actually made these highs as their clean highs. So there are three clean highs, sorry, not highs, clean lows. Okay, I'm sorry, I told three clean highs, but clean lows. Okay, so one sell side, two sell side, three sell side, and all of this sell side liquidity below, where is the imbalance? I can see this is the only imbalance. Don't forget the imbalance, brother. because price reverse from a specific level. It can't reverse from randomly. Okay, so when it will take some kind of sell side liquidity, it has to reach in a imbalance, then it will reverse from there. If it would like to go higher, it has to take some sell side buy side liquidity, then it has to reach in a certain level. From there it can reverse. It just can reverse from a random level. It can't do it. Sometimes it do it, but 99% of the time it you will see price did this type of things. That means price actually go for the liquidity, and when it has taken the liquidity, it go little more for, I mean, for some kind of imbalance, or the water block, or breaker block, or any kind of level. It has to reach some kind of level for reversing. Okay, so it's like, if you throw a ball, the ball will never rebounds. I mean, it will never come back to you if it don't bounce from a obstacle. Okay, I think any of you know about the cricket. So when we throw the ball and that ball hit by the bat, then the ball go some other place. Okay, it can't just come back from a empty space. It can't do it. So price is like that way. It go toward the liquidity, but from where it will bounce from a certain obstacle. It has to be some kind of obstacle. Like, look over here, the price was falling, right? It was falling. Why? To take this sell side liquidity. So it was falling, it has taken the sell side liquidity. Why it didn't reverse from there? Why it came here? Because you can see there is a water block. You see this candle, this is the lowest candle, lowest down, down close candle. So that was the water block. So price actually came to that water block, then it rebounced. It bounced. Where did it came? Why it came exactly over here? Because it has come over here. It has just this, look at this imbalance. It has balanced that imbalance, then it reversed again. Where did it came? Here. Why? What we have over there? You see this candle, this is the most obvious candle. Mark the 50% of that week. You will see the level at the 50%. It reversed little bit, and then it was just consolidating over there. It came again over here, where? To a imbalance. It came over here, then it went higher. Why it came here? Why it didn't just came, I mean, somewhere here? Why it didn't came here? Why it came here? Because you see, this is the last fair value gap to this leg. This is the last fair value gap, so it came to this fair value gap. After that it went back again. I mean, it reversed from the order block. It went higher. Where did it go? It went to this, I mean, above this buy side liquidity. And if you go back, you will see there is some kind of fair value gap over here. Actually, I can't go right now because it's too far from here. I want to explain the price action over there. Okay, so price actually do this type of things. Now look here, why I took sell yesterday, and I uploaded the video as well to my Twitter. And you will see, because of my internet, I didn't able to take that entry. When price is going higher, it came to the 75%. I was expecting some kind of lower run, but for the lower run, what I need the setup. Where was my setup? It has taken the I mean, the buy side liquidity. This is my buy side liquidity has taken. Now you can ask me, if you mark this buy side liquidity, then this is not your breakaway gap, right? Because this is at the level of buy side liquidity. You are true, brother. But when actually we take our entry, this breakaway gap exactly over here. But if you look, this high, this high, this high, this high, and this high, are they equal highs? I can't see them as my equal highs. So this is my buy side liquidity has taken over there. So it has taken the buy side liquidity. This run has taken this, all of this buy side liquidity. Market came little bit lower, it went higher again. Why? To take this buy side liquidity. It came little bit lower, it went higher. Why? To take this buy side liquidity. So this is the highest buy side liquidity. It has taken the buy side liquidity from there. If I saw this high is very near to this high, very near to this high, then that would be my buy side liquidity. I would think, okay, this is actually the buy side liquidity taken. But as this is not equal highs, in that case, this is not my buy side liquidity. My buy side liquidity is over here. Then brother, why you mark that on? I marked this one because, just let me show you. If I marked it from here, and it doesn't look very good, right? I mean, It's kind of you can say it, it's look good for me. Okay, that is the only thing I marked this one. But to be honest, this is actually the buy side liquidity has taken off. Do you understand the reason why this is not buy side liquidity? Why that one is my buy side liquidity? Just if you don't understand, ask me the question. Okay. Tuesday market did the expansion, not the manipulation. So what that be? Weekly. Okay. We know the thing is, if we see the expansion in Monday, I mean the Tuesday instead of the manipulation, then we will expect rest of the week we will see some kind of choppiness, sloppiness, no perfect price action, something like that. Okay, because we got the expansion before it should happen. We got it before it should happen. Okay, now, if you confuse about the buy side liquidity, if you would like to mark this one as your breakaway gap, it's not bad. You can do that because this is also valid for buy side liquidity. I mean, breakaway gap. This is at the buy side level. That is why if you do not want to mark that as your breakaway gap, instead of that, if you would like to mark this one as your breakaway gap, I don't say you that you are wrong. It is also the breakaway gap, valid breakaway gap, because if you force the market to make them as a equal highs, they are relatively equal highs. Okay, I'm not, I mean, this is true. This is relatively equal highs. So in that case, this breakaway gap is not valid. This one is the valid breakaway gap. Now sometimes actually price do this type of things. I mean, it actually make confusing price action sometimes. Okay, so this is one kind of that time. Okay, whatever. When it has taken the buy side liquidity, I got this market structure shift. Do you, any of you has any confusion about this market structure shift? This is my perfect market structure shift. Now this low, when it has shifted, you see this low, no, it is not the market structure shift. I will not go the market structure shift with this swing low because this didn't match my rule. So I am ignoring this low. Instead of that, when I saw this candle has shifted the market, I just immediately I marked this fair value gap and that fair value gap. Okay, so my target was something like this. So I would take my entry over there. I will cover the upper fair value gap, consequent encroachment. In my opinion, that was the breakaway gap in that time, and I would target for this equal loss. That is the equal loss. I will take some partial below this equal loss and I will hold my trade over there because my extreme sell side liquidity is over here. So this is my extreme sell side liquidity. So I will go until here and I will take some partial below this low. And you see how beautifully it actually gave me the trade. Now from the morning when price was going higher, it was going higher, right? So all of you or some of you was thinking, oh man, we have missed a very big run, very big run. But when it was going higher, was there any perfection, was there any logical, I mean, I didn't see any logical level where we could take our buy. We didn't know how long it will go, then it will retrace. So we should wait until it reach in a specific level. Okay, so it came here. When it came to the consequent encroachment, I was thinking I will get my setup over here, but fortunately, unfortunately, there was no setup. You see, it went higher, it just came lower little bit, it retraced, it lower again, went higher. Okay, so there was no setup, nothing. I was waiting to see what price can do. If it can take the buy side liquidity, then can give me the market structure shift or not. Then price went higher. Where did it go? To the 75% of this fair value gap. I am expecting a retracement. Why? Because market came from very low to very high. It should take some kind of retrace. So this was the retracement. When I got this retracement, and in the meantime I got the setup, very clear setup. It has taken buy side liquidity, market structure shift. This is the fair value gap, first fair value gap, this is the second fair value gap. I took my entry over there, my stop loss will be there, my target will be here, as I have very clean sell side liquidity. Okay, now you think, okay brother, I really don't want to take my sell over there because it is retracing. I don't know how long it will go. Okay, no problem. Let me go to the 15-minute chart. I'm gonna read your I mean the comment, but before that I really would like to explain this. Okay, just give me some time. I have lot of time today. Look over here. This is the run, right? From here to here, this is the run. Is there any fair value gap until from here to here? Is there any fair value gap? Anybody can see any fair value gap? I don't see any fair value gap over here. I have the lowest fair value gap 15 minute here, and when I came here there is another fair value gap. So if it is retracing, okay, I am thinking that it is retracing. Why? Because I have very clean buy side liquidity over there, and when this consequent encroachment of the 15-minute fair value gap, it failed to hold the price. I was thinking, okay, market will go to take this buy side liquidity. So if it would like to take the buy side liquidity, it needs to take some kind of retracement. Where should it go? It come to the this fair value gap. This is the fair value gap, okay, below all the sell side liquidity. Now you can tell me, brother, why it will come here? There is another fair value gap. Okay, let me mark the fair value gap as well. So this is the fair value gap. Look, anybody didn't close below this fair value gap, but we came to the breakaway gap. I mean consequent encroachment, it didn't reach over there. Okay, so if you mark this one and you expect, okay, market will came here, then it will go higher, that is also valid. Now I'm going 1 minute chart one more time. Okay, so okay, so this is your two fair value gap from 15-minute chart. Just I will remove this line because that will confuse you guys. I'm gonna remove those lines. Okay, and I'll keep this one because I would like to talk about that. Now when price came here first time, it went higher. Is there any market structure shift? Is there any market structure shift? No, I don't see any market structure shift over there. So there is no setup, right? So I'm thinking market will go, I mean it will retrace and it will come to this upper fair value gap. It came to the upper fair value gap, but market when it started to go higher, there was no fair, I mean the market structure shift. That means there was no setup. Price went lower. Am I looking for sell? No, I'm not looking for sell. Why? Because I got my level, I mean selling setup over here when it has been retraced from the 75%, and that was a very nice setup. Here was no setup, so I'm not looking for sell over here. I'm expecting, okay, market will go to a specific level, then it will retrace. It came to the consequent encroachment, it was just consolidating. Was there any setup? I mean the breakaway, I mean the fair value gap setup, what I always talk about you, I mean this type of things. Was there anything over there like something like this? Okay, sorry, was there anything over here? I don't see it. Nothing. So price came little bit higher again, then it went lower again. Okay, it came to the 15-minute fair value gap. This is 15-minute fair value gap. I'm just gonna remove that one because I have 1 minute fair value gap, very clean 1 minute fair value gap. Where did price came? To this 1 minute fair value gap. After coming here, it went higher. It gave you market structure shift, whatever. I don't want to talk about that, and I'm gonna remove this upper fair value gap as well, as it went to the lower fair value gap. Okay, now what I told you about the mm, break breaker block, what did I tell you? If you remember, this is the breaker entry, that was my breaker entry. Okay, so there are two types of breaker. I told you that if you see this type of consecutive run, then the both of them you will mark as your breaker. But if you would like to mark the higher close candle as your breaker, that is also valid, because sometimes ICT marked that one as his breaker, sometimes he marked that one, I mean the 2 or 3 consecutive candle as his breaker. I will go for both of them. Okay, I want to be more conservative, that is why I am just marking both of them as my breaker. So that is my breaker. Why that is my breaker? Low, high, lower low. If you see clearly yesterday's video when I have uploaded the entries, this was 1, 2, 3. Between two low, there was the highest high, that is my breaker. So this is my breaker. When it went below the old low, look over here, this is old low, this is old low. Price came below the old low. Is that traded any fair value gap? Yeah, it has traded this fair value gap. Did it shows me that market would like to go higher, or this fair value gap has been broken? No, it didn't broke. Body has closed, even body has closed above the fair value gap. It didn't even close at the consequent encroachment. it closed above the fair value gap. So this is a clean sign market would like to go higher. What level do we have over here? This is 15-minute fair value gap low, so that is the fake breakout. So it is also showing us that market would like to go higher. Did we get a high run? We got it. Fair value gap, we have the fair value gap. Market above, went above the breaker. Yeah, when it went above the breaker. Okay, just let me mark the middle line. Okay, so that is the mean threshold of the breaker. Okay, I don't know it is clear or not. It is the mean threshold. However, when it break the breaker, the very next candle, when it come back again to the upper level of the breaker, I took my entry over there. I'm already in the market where I put my stop loss below the breaker. I gave little bit space, so that maybe I put my stop loss over here somewhere below the breaker, but it can't break the breaker low. Nobody can close below the breaker, and I wrote it down that 95% of the time this breaker will give you the winning trade. Why this breaker is already valid? Except the SMT with the elimination P, everything was perfect. I didn't check the Dow, but I believe if I checked the Dow, I would get the SMT as well with the Dow. Okay, so when price came back again to the upper level of the breaker, I took my entry. When it came to the consequent encroachment, I pyramided. Then I told you when it will leave the breaker, it can't come back again to the breaker until it has taken the buy side liquidity. Look at this buy, this candle's high and this candle's high. Okay, this candle's high, are they clean highs? Anybody has any objection about this clean highs? I don't have any objection. This is buy side liquidity. Price went higher, take the buy side liquidity, it came back again to the consequent encroachment. Now why it came here? Somebody will think this was sloppiness. Okay, if you look like this way, just let me show you like that way. Oh man, that was sloppiness. No, that was sloppiness, that was the macro. That is my favorite macro. I love 1250 to 110 macro and 250 to 310 macro at the PM session. So these two macro I love. I really love these two macro. I fall in love with them. But this whole setup was for the macro, and it actually went higher. It For this macro, I need some kind of retracement first from either order block or from fair value gap. So I got my retracement from there, from the fair value gap, and I really didn't check the order block. I need to check actually. I need to check. Okay, I didn't see. I saw only. Okay, perfectly. I got my rejection from the order block as well. So in that macro, 1250 to 110 macro, there should be something that is not like the other macros. Okay, so it has to first go somewhere where there is a fair value gap or a order block. Okay, it can't reach to the mean threshold. It can't go over there mean threshold. It has to, if there is it retrace from the order block, then it has to retrace from the order block opening or the week. Okay, it can't go or reach to the consequent encroachment. If it went over there, then this macro is not valid. So it came here, it went lower, it made the equal lows. If you watch my video, you will see I actually marked this one with the red color. Okay, so that was with the red color. Why I put the red color? Because that was my sell side liquidity, and the very next candle it has taken the sell side liquidity over there. After taking the sell side liquidity, is there anybody that has closed below the breaker consequent encroachment? I will come to your comment, brother, but please let me finish this first, then I will come to your comment. I will ask you if you have any question. I will go over there. Okay, no problem, but please let me finish it first. So please, if you have any question, hold it or write it down to your notebook, then later ask me the question. If you just continuously comment over there, I can concentrate over here. Okay, so please, that is a request. Please write it down to your notebook, and then when I ask you to ask me the question, please write it down then. Okay, so it actually came here, nobody closed below the breaker block consequent encroachment. In that case, I could put my stop loss over here, but I didn't do it because I was thinking if it can come back again to the lower part, the breaker block low, if it can do that, I will add more. That is why I didn't trial my stop loss, and I'm very afraid to trial my stop loss because most of the time I did it wrongly. I know the rules, but I don't follow the trial stop loss rules. Okay, that is my weakness, and I don't know how long it will take to recover that weakness. Whatever. So it actually came here, and let me just close this one. So that wasn't the, the consolidation over here. That was for the um the macro things. Okay, then it went higher, and I marked it over there. Just let me mark this one. That was the fair value gap as well, this fair value gap as well. Okay, and then later there was the the order block over here. Finally it reached to the, I target to the low of this breaker. Not here, not this one. The upper one was my breaker, so breakaway gap. So I actually targeted to the low of the breakaway gap, and that was my entries over there. So in a market where, alaikum assalam, in a market where I could take a sell over here, I could take a buy over there. Both of them were logical. Now tell me, I asked you guys, just compare this buy run with this sell and buy run. This sell and this buy entry. Was there any logic where you could take your entries? I didn't see any logic. It is very easy to show the setup after it happens. Okay, if this candle could come over here to the upper level of the hourly fair value gap, then I would look for the buy entry. Okay, I would look for a buy entry over there, but it failed to come to above to the hourly last fair value gap. This is the hourly last fair value gap, if you don't forget, hourly last fair value gap. So it failed to come over here. Instead of that, it actually tapped to the opening gap. After tapping to the opening gap, it didn't take the sell side liquidity, so I had no entries over there. If it can reach over there, I would look for a buy over here, because in that case it could take some kind of sell side liquidity. It failed over there, so it started to go higher. What will we do? We will chase the price. I am not going to chase the price. It is going higher. It is just a run. You see the run, there was no setup. When it came here, it just consolidate little bit, take the buy side liquidity, reach to the 75%, gave you market structure shift with nice to fair value gap. That is your sell entry. Why? Because you have relatively equal lows over there, relative equal lows over there, relative equal lows over there. You have very nice clean, very clean sell side liquidity. You can take your sell over there. Now if you are stopped out and it started to go higher, okay, it can happen. It can happen. I'm not telling that it will work, but this is logical. It shouldn't do it. It should take the sell side liquidity. It has taken the sell side liquidity. It went back again. Where did it go? The 50% of the consequent, the 15-minute fair value gap. It went over there. In the meantime, it has closed all of this fair value gap. It went over there. It went lower little bit. Again, it came and take all the sell side liquidity. There was no sell side liquidity left. Where did it came? To this 15-minute or 1-minute imbalance. It came here. It gave you very nice market structure shape. Maybe there wasn't any how to say fair value gap, but that was your very nice order block. You see this, the last up close candle before the up move. This is the last down close candle. So that is your order block. You can take your entry over there, or you can take your entry depending on your breaker. I took my entry depending on my breaker and I write it down. That is my favorite. Okay, so it has taken, it came here, it went higher. After that, when it has taken the buy side, the here it take again the buy side liquidity, it went for the consolidation. This is pure consolidation. You have to avoid this because there is nothing, right? This is 75%. It failed to hold that 75%. It was consolidating over there. There is no specific level from where it can retrace or it can go. Okay, nothing. It came back again to the lower, the consequent encroachment. It went lower, take the sell side liquidity, go back again, higher again. It has shifted the market over there. This was your fair value gap. Market failed to come to that fair value gap. No setup. It went higher again. It went lower. Then it continuously it went for the. After 4, it just do something like this. I am not upset because I failed to take this entry. I am not upset because I failed to take this entry. I am not upset because I failed to take this entry. I'm happy because I saw this entry happened over here with logic. Sell side liquidity, buy side liquidity taken, market structure shift, fair value gap, very nice setup. I'm happy to take this sell side, this entry. I could see I saw it beforehand. I showed you this entry so many times, thousands of the times already. I've shown it to you, two fair value gap setup, right? Price came lower, it came here, logic. It's logic. It came to the lower part of the 15-minute fair value gap, and it has also traded the 50-minute plus 1-minute fair value gap. It went higher. There is breaker block. Did I teach you breaker block? Yeah, I did. I did it. Okay. It came to the breaker block. It went higher. Where did it go? Is there any logical level? Obviously, this is your breakaway gap. If you think this is your breakaway gap, you can mark it, or this one. Any of that you can mark it. Okay, in my opinion, that is my breakaway gap, but this is also valid if you follow the rules. I mean, if you think this is the relatively equal highs, so you can target until here or to the lower part of the this breakaway gap, because that is the last fair value gap. Price can hold over here. I mean, that fair value gap can hold the price and send it back to the low. So if there is no clean buy side liquidity, I can target over here, or I can take target to the I mean to the last fair value gap. Okay, now if you think this is your breakaway gap, because you don't want to mark that one, because that is at the level of the buy side liquidity. Okay, you don't want to mark that one as your breakaway gap, you want to mark this one as your breakaway gap. Okay, no problem. Let's see, is there any setup or not. When it went through this breakaway gap, did it came back to the constant encroachment one more time? Yeah, it came, brother, it came. Okay, okay, okay. So it actually came to the constant encroachment of the breakaway gap. Did anybody closed below the consequent encroachment? No, brother, there is nobody that has closed below the consequent encroachment. Okay, then did it left the area one more time? Yeah, it has left the area one more time, and that was a curve. Okay, not just when next candle came back. No, that was a curve. Look over here. Huh? Are you allowed to take that entry and put your stop loss to the lowest low? This is your lowest low, this is your lowest low. If you would like to mark put your stop loss below this low, that is also valid. Yeah, you can take this entry over there. Now, was there any relatively equal highs or equal highs that is your target? No, brother, there is no equal highs or relatively equal highs. There is no equal highs. Then is that entry valid? No, brother, that entry is not valid. But it went how much? I mean, it's near about, okay, so 20 handle. Okay, near about 20 handle. So it went actually near about 20 handle, and I wasn't be stopped out. Will I miss that entry? Obviously you will miss that entry. Why? Because you don't have the buy side liquidity. You have to have buy side liquidity, relatively equalize, you have to have. But brother, if I go so far, I mean so far before, maybe I will get some kind of buy side liquidity. Okay, in 1 minute set, would you like to go so far? If you want to go over that, that means you are forcing to take I entry. You are not allowed for that. You are not allowed. You have to find some kind of buy side liquidity very near to you. That is very clear to see you. Okay, that means this entry is not valid. But brother, it worked perfectly over there, very perfectly over there. Why you are telling me not to take the entry? Because the most important thing, the very most important thing is the buy side liquidity. If there is no buy side liquidity, no entry. I don't care how beautiful the setup is. I don't care how beautiful this setup is. I don't care how beautiful this setup is. I don't care. Try to understand, brother. I don't care. I am not looking for entry. I am looking for first buy side liquidity. If I don't see the buy side liquidity, there is no entry. Nothing. To be honest, brother, there is nothing. If I see clean buy side liquidity or this type of things, okay, the last breakaway gap, market will go at least to this breakaway gap. Don't target this breakaway gap right now. You are not permitted to target the breakaway gap right now. You will target this later when you will understand the price. That price will go back over that breakaway gap. Right now, your target is to mark the sell side liquidity. You see this clean lows, this clean lows, this clean lows. You have to mark the clean lows or clean highs for your target. If you don't see the clean highs, clean lows, there is no fucking entry. If you don't follow this thing, you will never be a profitable trader. Never, ever, never. Just write it down. Okay, so big boring lecture has end. I am going to read your question, comment. Okay, oh man, how many comments did you do already? I told you not to ask me so many questions, brother. Oh, we know. And today's narrative, I'll go today's narrative, brother, but just little more time. Okay, assalamu alaikum brother, yesterday was first time I saw you live and tomorrow you are leaving. Ayan, actually I'm not leaving. I need a break. Okay, I have something to do. It's very difficult for me to maintain the live streaming and my personal stuff all together. That's why I need some times. Okay, maybe 10 to 14 days I'll be free. If I, you see, today I get time, I just come back. I just message, okay, I am gonna start the live streaming today, so I have no shame. To be honest brother, I have no shame to disturb you again and again. Okay, so I'm not actually leaving. I need some times, that's all. If the upper parallel gap is breakaway gap, so what is the second parallel gap? What is called common parallel gap? uh, if you talk about this one, if this is not your breakaway gap, then you have only one gap. Okay, you have only one gap. This one you can't mark it as your normal fair value gap because it actually take the sell side liquidity already. It has taken the sell side liquidity, so you can just mark this one as your breakaway gap. In my opinion, when this setup has happened, I saw this one was the breakaway gap. But you see, this type of things actually confusing sometimes. Very rare you will see this type of setup, very rare. If you confused, don't just take the entry. That's cool. If you just don't take the entry, when I show you the euro USD chart, you will see over there how beautiful the setup was over there. Okay, this one also for me it is valid. This is the breakaway gap and this is the normal fair value gap, so I would take my entry over there. But if you are, walaikum assalam, if you are confused, then just don't take the entry. Simple brother. Okay, very simple. uh Alishina Askari, what is the reason for Nasdaq went so high? Did a news happen that I don't know? No, not actually like that. Actually, Nasdaq is going for taking the buy side liquidity, because after taking that buy side liquidity, Nasdaq will go lower. That is my belief. I believe that Nasdaq will go lower. Okay. TikTok. Hey brother, how are you? Oh, no, market structure shift and breaker are the same thing. No, market structure shift and breaker are not same thing. Market structure shift is just this one. This is market structure shift, and breaker is this one. I mean, the last up close candle or consecutive up close candle, that is the breaker range. So price can't break this range. And market structure shift is just shift the market. It is going higher, then it shifted to lower, and this low actually confirmed that market is going lower. That is why we mark this low as our market structure shift. Ravi Promar, okay, would it be better to take entry at the breaker block rejection when it tapped to the top, or for further confirmation even though it rejected at mean threshold level? Okay, when you will mark a breaker, just think you have marked this breaker. Okay, let me show you. Okay, so you have marked the breaker. You know this is the breaker. Price came through this breaker, it went above the breaker, closed over there. The very next candle will tap to the upper level of the breaker, you will take your entry. 90 or 80% of the time, price even don't reach to the consequent, I mean the mean threshold of the breaker. It don't reach over there. It will just leave the breaker area. It will tap to the upper level of the breaker. It will reject it from the upper level, and it will take the buy side liquidity. 90 or 80%, 80 to 90% of the time, you will see that market failed to go even to the break even to the upper quadrant. It just tapped to the upper level and rejected. Okay, so you have to take your entry to the upper level of the breaker. You have to put your stop loss below the breaker, and you have to give some space. Okay, some space, because a wick can easily come through the breaker. That is what was the word? Actually I forgot. ICT used the word, mm, oh man, hollow or something. Okay, he used the word when actually we saw some little wick came through the breaker. Okay, I really forgot the word what ICT used for that. I will if I remember, I will tell you. Okay, I think it's clear, Ravi, for us, not you, because we are learning. Yeah, for you guys. Yeah, I'm whatever I'm telling for you guys. Okay, when it will come back to the upper level, you will take your entry. Sage, for macro timing, which indicator can we use? Brother, I don't use any indicator. You can see this is my chart, okay? Here, look over here. I have no indicator. I never use indicator. Never ever. When I have started ICT, I never ever use the indicator. Previously, I tried some kind of indicator and that actually made me confused. I love to mark all of the level by my hand, okay, by myself, because it is kind of practice, and this is actually helped me to remind the level everything, okay. So you see there are so many lines in my chart right now. It's because of you guys, so that you can understand the level. But if I were trading, there won't be so many line, okay. I actually love to mark the price level to my notebook and use them. I mean, I have a notebook just beside of my laptop. I mark the price level and I always look the price over here. Where the market right now at what is the market level? 15369. So I know which level, which price level is important. When price came over there, I just look at my notebook. What is the level over there? Okay, that is the level. So I will just look at that level, how it is reacting from there. Okay, so I really don't use the indicator. I can't suggest you something about the indicator, brother. I'm very sorry. Why is not valid? George, you have to ask me the question again. Why is not valid? Because I don't know what you are talking about. Okay, brother, I understand. Oh, okay. If you understand, then good. Alice, brother, what times would you usually start looking at the charts? Alice, if you ask me right now, uh, there are two type of things, okay. To be honest, don't get me wrong. I if just think I don't I'm not streaming, okay. I'm not live streaming, so I am gonna take my entry to my funded account. So that is my plan for today. Maybe I get time before the AM session. I get time, so what I do, I came to the paper in, I mean, paper trade, and I try to read the price before the session, and I try to take some kind of entry before the session. Why? Because it helps me to confirm that I'm going on the right way. Okay, so I do some kind of paper trade. I take some losing entry, I take some winning entry. Actually, that is how I get that. Okay, that is actually price would like to do. After that, when session start, I started to look for entries for my funded account. Okay, for live account, I mean live money. Before session, I don't take entries to my live money. After session, I don't. Lunch, I mean at the lunch hour, I don't take entries to my live account. That is true, brother. And whatever I show you, that is for getting your attention. I'm just kidding. So that is the thing, brother. I always use, I mean, I'm also very new for the live money. I mean, 8 to 9 months I'm doing the live money things. I'm in the prop firm, and I have already decided that I'm not going to continue the prop firm. I want to start my own funding, I mean self-funded account from AMP. And very soon I'm just gonna blow my both uh, prop firm account. I will just take some biggest lot size. If it is okay, I will get so many money. If I am wrong, then I will blow my account. Okay, because when I'm able, maybe within in February, from February, I actually start the AMP with $10,000 self-funded account. So until then, I will keep that both prop firm. Okay. Okay, okay, okay. So okay, Mystic, is your table complete? No, brother, it's not complete yet. They will start digging the. I mean, the that is the thing. Actually, I'm going to my home where I'm building my home. That is my village. So I'm going to my village tomorrow, and I will stay there for 10 to 14 days. Okay. I want to actually see what they are doing, why they are taking so many times. It should be done within 5 to 6 days, but it's near about 1 month, and I am now very much irritated by their activities. I want to stay over there, and I would like to see what they are doing. Okay, so this type of things. Leave those people time to watch your previous live more in a day if they want to learn, and then come back to new step. I miss you, but it's better for everyone to get more from you. Listen. Oh, thank you, absolutely. Yeah, that's true. If any of you are new and you think you would like to learn, you have to watch the previous live streaming. Okay. Because whatever I taught you through my live streaming, and before that you have to watch the study section. It is very important, and the macro folder, that is important. Otherwise you will be Alisna Aksari, thank you, I understand. I don't know what you have understood, but if you have understood, I'm happy. Okay, only we should only look for entry after 9:30. No, or not after 9:30. It's better to wait until 10. Okay, it's better because until 10, sometimes 9:30 Judah swing happen until 10, and then we get the real entry. Okay, but 9:50, yeah, you can wait until 9:50. After 9:50, you are free to go. Okay, that's the thing, brother. Okay. Obhinav, why MSS and breaker looks same? Why? What are you talking about? Why it should be looking same? It is not same. What are you talking about, brother? Look, this whole area, okay, this whole area is the breaker block. This whole area is the breaker block, and market structure shift just this low. This low has shifted. That means I got my market structure shift. Not this whole candle is my market structure shift. This low, when this low broken, I got my market structure shift. But this whole area is the breaker. This whole area, that means price is allowed to come to this area, and then it can't break this area. This is the breaker. Okay, do you understand the breaker? Like the brake to the car or bike, the brake, this is the brake. It is breaking the price run to go lower. It stopped price over there and send it back higher. Okay. So that is breaker, brother. Clear, brother. Thank you. You're most welcome, Ravi. Abhinav, we only use one indicator, and that is like button. Okay. Okay, give me some like. Can I check how many likes did I get? Only 21. I can see there are 22 people, and I got 21 like. Oh man, some of you didn't give me the like. It is unfair. Okay, you should give me some likes. I say ICT usually does that too. Testing the market. He says just to feel the market. Yeah, early it's. Uh, I saw it actually. ICT did it by the real money. I mean, he maybe put one contract and he test the market, but I do it by the paper money because I can feel the market by the paper money now. Okay, so I really don't use the real money for testing the market. I don't do it, to be honest. It is the true thing. I'm not gonna lie you. Okay, so and I hope you guys actually mark the opening gap. If you didn't, just do it right now. Okay, the one more ওই কাজে ফাঁকি দিছে। ওরা মনে হয় কাজে ফাঁকি I don't know, brother. I was here, I mean far away from my home. I'm somewhere else actually, our another home. Okay, I'm now, right now I'm another home, but that is my home from my village, so that is my dream home. That is the thing, that is why I'm actually expecting. I will go over there. Okay, so now talk about today's price action. I have successfully spent it so many times. So we can see prices actually going higher, but this high didn't break yet. I will go to the 50-minute chart and I will see if it has broken the high, fair value gap high. Okay, this is the fair value gap high. Don't forget the break fair value gap. I will go to the, okay. So in my opinion, it has broken the high of the fair value gap, so it should go lower now. If it, I mean, it should go higher, not lower. It should go higher now, in my opinion, until this breakaway gap. Let's see how it works over here from the hourly chart. But from the hourly chart, we can see actually it has rejected. This is the fake breakout. There is a fair value gap over here. I told you guys, until price leave this area, okay, this daily fair value gap, until it left it, okay, I don't have any perfect direction. I can do the scalping like I showed it to you from Nasdaq. There was a sell, there was a buy. The sell was depending on the 22 YT model, the buy was depending on the breaker block. Okay, so that is scalping, not bias wise, I mean entries. So until it left this area, this fair value gap, I really don't have any bias. I don't know where price will go, but when it will left this area, I will look for some kind of setup. Okay, I mean some kind of bias. Let me go to the over here and daily chart. Look, it came here, it went higher. Now I have this buy side liquidity, very clean buy side liquidity, very near to the price right now. So I can easily think market can go and take that buy side liquidity. It will reach to this daily fair value gap, maybe to the water block, then it will reverse. I want to see price will go lower, but when it will go lower, I don't know. I really don't know, brother. I want to see that it will leave the area first. When it will leave the area, then I will go for some kind of setup or something. Now yesterday was manipulation, but yesterday we got this expansion. That is expansion. When we got the expansion in Tuesday, rest of the week price is very hard to read. Always remember that Tuesday is just for